The news day continues here on One News Now. I'm Dani Laurel. Now here are the biggest stories on the economic and corporate fronts. The Bangko Sentral says it will prioritize inflation in its upcoming policy review instead of the Fed's rate hike. BSP Governor Medalla says the central bank will focus on managing inflation expectations. This even as the U.S. Federal Reserve delivered a smaller 25 basis point rate hike last week. The Monetary Board is set to hold its first policy review meeting this year on February 16th. The Bangko Sentral earlier projected January inflation to fall within 7.5% to 8.3% range. Speaking of consumer prices, inflation likely cooled in January off the back of weaker demand and a stronger peso. A Business World poll of 15 economists yielded a median CPI estimate of 7.6%. That's lower than the 14-year high print of 8.1% recorded in December of 2022. Now, the forecast for last month is also close to the lower end of the Bangko Sentral's projection range of 7.5% to 8.3%. Analysts say consumer demand likely fell after the end of the so-called Burr months. They're also pointing to a stronger peso, which rebounded to the 54 to $1 mark in January. Cooking gas also declined last month. Now, these factors may have offset the rise in utility rates and pump prices, according to some analysts. Oil companies are offering motorists some relief as fuel prices are set to roll back this week. Effective tomorrow, February 7, diesel prices will see a decrease of 3 pesos per liter. On the other hand, gasoline prices will drop by 2 pesos and 10 centavos per liter, while prices of kerosene will be slashed by 2 pesos and 3 centavos per liter. The rollback follows 3 weeks of consecutive price hikes for gasoline and diesel. BPI reports full year 2022 net income of 39.6 billion pesos. That is 66% higher than that of the previous year on higher net interest margins and lower provisions. Now, for the fourth quarter, it logged a net income of 9.1 billion, that's down 10.3% quarter on quarter. The bank generated record revenues of 118.5 billion pesos, boosted by the growth in net interest income. BPI's stock price was down 1.72% to 108 pesos and 50 centavos as of 11 a.m. this morning. We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Dani Laurel. The government has approved 7 big-ticket infrastructure projects under the Public-Private Partnership Scheme. Mobile journalist Pamela Vasquez with this report.
Seven projects have been approved by the National Economic and Development Authority Board. These are said to be the big-ticket infrastructure projects of the Marcos administration. Based on initial estimates, the indicative total cost for these approvals would be at 154.7 billion pesos. The first project approved by the NEDA board is the construction of a cancer center at the University of the Philippines Philippine General Hospital. This will be the first public-private partnership project under the leadership of President Bongbong Marcos. Aside from that, the NEDA board also approved the additional 7.6 million peso budget for the rehabilitation of MRT-3. When asked if there is a possibility of a fare increase after the rehabilitation, Secretary Arsenio Balisacan had this to say.
The public consideration, the public interest consideration is always high in the agenda of the government. So, hindi mangyayari yan.
The NEDA board likewise granted for the use of the 2.1 billion peso loan from the Japan International Cooperation Agency or JICA. This is for the proper air traffic management in the country following the recent technical glitch in our airports. The construction of a new Dumaguete Airport under the DOTR has also been given the green light. The same goes for the Mindanao Inclusive Agriculture Development Project of the DA and the Integrated Flood Resilience and Adaptation Project of the DPWH. Lastly, the NEDA board confirmed the ICC approval of DOTR's request for changes in scope, increase in cost, and extension of the implementation period for the Metro Davao Public Transport Modernization Project. Mobile journalist Pamela Vasquez, we are One News.
With the pandemic now hopefully a thing of the past, there is one sector that many continue to watch. And here to tell us more about how to navigate the new normal property space, we have with us Joey Roy Bondoc, Research Director over at Colliers. Good morning, Joey. Welcome back. Joey, can you get off
Morning,
of
Dani.
me, please?
Great to see you again.
There you go. All right, I wanted to kick off with offices, no? Question, because anecdotally, are people going back to the offices the way that we used to go every day talaga? Because we see it so traffic. There's so many people here in my own office. But then at the same time, things have changed and some people are doing businesses online, some people are doing hybrid work. I hear of corporate scenarios where they're requested to go 3 days a week instead of 5 days. So tell us, what is the real trend that's going on? Meron bang nomad work or meron na bang back to normal na talaga?
It's still hybrid, Dani. Well, in my case, I go to our office every day. But in a lot of cases, it's still hybrid. So companies implementing split operations. So employees would be in the office 3 days and then 2 days they'd work from home. So it's still mixed at this point. So both work from home as well as return to office.
Do you think we will ever go back to the full office life again? Is it just a matter of time, or has there become a complete and fundamental shift into this is going to be how it's going to be? It's going to be hybrid forever.
I think, Dani, it's gonna be hybrid forever. We got used to working from home, and then we slowly adjusted when the government lifted the restrictions. So now we are working from anywhere. We started to work from home. Now we're working in a coffee shop, in a inside a mall, perhaps, or perhaps even in a fast food outlet. But what we have been seeing is that for a lot of employers, for them to be able to entice talent, top talent, especially the fresh graduates, it's really important that they implement work from home or split operations, because as you know, some BPO companies even had to let go of their tax incentives just so they can continue implementing work from home. And you're talking about millions of pesos of tax incentives. So it's really hybrid at this point that is king.
Joey, how does that impact the vacancy rates? No, are you seeing companies, that they were wait and see mode for 2 years, 3 years, and then now they have to decide, babalik na ba sila to renting the office space that they had before, or are they really, reducing the spaces? In your report, I think you mentioned 20% pa rin the vacancies in the office space.
That is correct, Danny. So we can't deny the fact that these BPO companies have indeed rationalized office space requirements. We have clients that fully vacated office buildings, 2, 3 floors that they used to occupy, but now these floors have now been vacant. I went to a couple of office buildings in Port Bonifacio, and I saw these spaces vacated by large multinational corporations. But there are also some MNCs that they may not occupy 2, 3 floors at this point, but what they have been requiring right now are co-working, flexible workspaces.
Okay.
So they have been minimizing their capital expenditures. So they are spending OPEX or operational expenditures. So that has really minimized their CAPEX. We have MNC clients that took up flexible workspaces in Makati CBD, for example. So you also have a lot of companies that are from the micro, small, and medium enterprises. They are gauging their medium-term plans, perhaps even long-term plans. And as a start, they are occupying these flexible workspaces. They need to consider how do we expand over the next 2 to 3 years. And perhaps as a start, we should be occupying co-working spaces for now.
Okay, so how is this vacancy rate going to change in the near term? From 20%, what are you projecting it to be looking like this year or in the next couple of years? What's the normal vacancy rate, Joey, pre-pandemic?
It's interesting you mentioned that, Danny, because remember when we would have discussions face-to-face before, I would even mention that vacancies in Metro Manila would hover from about 4 or 5%.
Wow.
Makati Bay Area, where you would even see vacancies of 0.6%, even sub 5%. And that started to increase 9 to 10% in 2020 at the height of the pandemic, the COVID disruption. And then in 2021, that started to increase also about more than 10%. And right now, in 2022, we saw vacancy of almost 19%. That's 18.8%. And then a further increase, about 20.5% by 2023. We're likely to see some improvement by 2024 because, again, we're projecting positive net take-up in the Metro Manila office market. So this only means that there will be more vacated or occupied office spaces rather than vacated office spaces. So that's still positive, but we do not see a return to pre-COVID vacancy rates
anytime soon, no? So still double digits there. Let's talk about the housing market, Joey. So it seems that, of course, with the rates pretty high, it might be 6% just from the Bangko Sentral. I mean, I can't imagine how much more just to get a housing loan, no? How can this segment still continue to grow? Do people have enough money right now to be taking on a housing loan?
You'll be surprised, Danny, that we're talking about condominium units at 500,000 pesos per square meter, more than 100 million pesos per unit.
That's crazy,
they're doing very well in the market. But of course, this is the affluent, the ultra luxury, the luxury residential market. So there's a pretty good take-up for these projects. But outside of Metro Manila, Danny, what I can tell you also is that projects are doing very well. One example is Angeles in Pampanga. They have a Rockwell project there where after about a year of being launched in the market, it's 90% taken up already. It's a pre-selling project. And prices also, whether you go to Bulacan or drive further north to Angeles in Pampanga, prices are at about 250,000 pesos per square meter.
Wow.
And these are condominium projects, prices that you'd only see in Metro Manila previously. But now, these are proliferating in Pampanga and Bulacan. You have the likes of Mega World also that are expanding aggressively in Bulacan, well, because of the new airport project that will likely open 2027. But even down south, Cavite as well as Laguna, there are interesting projects, 150 to 200,000 pesos per square meter. that are about 20-25% taken up after about a year or even less than a quarter. So that's a pretty good indicator of residential demand. And also, you have to note that the sweet spot for the residential market, especially the house and lot landed market, that's 3.2 to 6 million pesos. And Filipinos continue to acquire these properties, especially if you talk about the OFW market. The sweet spot for this OFW segment is the 3.2 to 6 million pesos per unit. So if you look at these projects, house and lot projects, you won't be surprised to know that about 60-70% of demand from these projects is actually coming from the OFW market. So it's a pretty good take-up from the OFW market. But we also highlighted in our previous studies and presentations that with rising interest rates and mortgage rates, will this temper the demand for horizontal segment moving forward? So that also needs to be closely observed.
Okay, no, very, very surprising insights there. I mean, people still have money to spend, apparently. And like you mentioned, it seems there, at least for the residential area. And of course, for the commercial space, waiting to be going down still in terms of vacancy rates. Still a question there on this hybrid work format. Thank you so much for all your insights, Joey Roy Bondoc, Research Director over at Colliers. Now, the Securities and Exchange Commission warns against investing in 6 companies. These are Web Mining, Oyala, BKC Trading, Winvest, Mazama, and MetaTrade. The SEC said these companies have not secured their license to offer securities. The Commission identifies the schemes offered by the 6 entities as Ponzi schemes, as money from new investors is used in paying, quote, fake profits to prior investors. Now, business tycoon Roberto Ongpin has passed away at the age of 86. A social media post by his nephew, Rafael, said that the billionaire businessman died in his sleep on Balisin Island on Saturday. According to the same post, his remains will be brought to Manila and the family will make an announcement once details of the wake are ironed out. He was the chair of property developer Alphaland and chairman and CEO of mining firm Atok Big Wedge Company. Ongpin also served as the Minister of Commerce and Industry from 1979 to 1986. Last year, Forbes named Ongpin as the 23rd richest person in the Philippines. We extend our condolences to the family. For more updates, visit News 5, The Philippine Star, and Business World Online. Visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com. And stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 2 p.m. We are One News, all sides, all the time.